What's going on, everybody? Michael Album here. Welcome to another episode of the Remote Real Estate Investor. Today with me, I've got Ryan Lee with Cashflow Tactics. And Ryan's going to be talking to us about his background, how he became financially free, and what are some tips and tricks that you can maybe do the same. So let's get right into it. All right, Ryan. So you were saying before that you figured it out because you had to. And so I'm curious to know, what was it that you figured out? What were some of the tips and tricks and tactics that you figured out along the way?
Yeah, man. So again, kind of going back to Rich Dad, Poor Dad, first he slapped me in the face and said, hey, everything you think you know about money's wrong.
You're doing it wrong. Yeah.
Yeah, you're doing it wrong and you're an idiot, right? And then the next thing that he said was, hey, the definition of financial success, and this radically revolutionized my thought process, it's not how much your net worth is. Like at the end of the day, no, it doesn't matter how much money we have. It matters how much income your assets generate. And so I started measuring my success off of how much income can my assets generate and how long is it going to last and how predictable is it going to be. And this really exposed the lie of the 401k, because even if I had quote unquote enough money in the 401k, I couldn't get it, right? It was stuck. It was going to be taxable and I couldn't take it out before 59 and a half. And so I realized, man, that's a trap. So I went down the world of real estate, and real estate is the most powerful wealth creator out there, but it's also a pretty dangerous tool, right? And I went into it super naive. I'm grateful that I did it because I made a lot of mistakes. But, I went into the game of real estate trying to do it all on my own, right? I thought, hey, I'm going to go out and find the property. And then once I find it, I'm going to rehab it. And then I'm going to renovate it. And then I'm going to put a renter in there. Then I'm going to collect the rent. And I did that 3 times, right? And the first time I did it, walked around with my chest all puffed out, right? I'm a real estate investor, and I wanted to tell everybody about it. The second time I did it, I was a little bit nervous. And the third time I did it, I almost had a panic attack, because here's what was happening, right? I mean, every property that I bought, I was actually getting further away from financial freedom, because I had to find it, I had to renovate it, I had to put a tenant in it, I had to manage it. And man, if there's anything that you know about me, I am the absolute worst property manager in the entire world. I mean, every time my tenant would call me up with whatever sob story they had, I would sob right along with them and say, hey, don't worry about it, I'll pay your rent for you. And this happened for a good 6 or 7 months where I was just bleeding money and I was bleeding time. And I realized, man, the only way that I can do this is if I start plugging into other people's expertise, right? I can't try to do it all on my own because I'm losing time that way. But if I can find people that love real estate, they wake up in the morning, they're like, man, I love real estate. Because that's not my definition of financial freedom. I love real estate for what it does for me, but I don't want to do real estate. So if I can plug into teams and people that have expertise in real estate and finding, rehabbing, renovating, managing, all of that stuff with real estate, then my life gets a lot easier, and I become the CEO managing to outcomes. So the difficult lessons that I learned along the way was, don't try to do real estate on your own, right? Plug into other people's networks and teams and have them do the real estate. And yes, they make money, but guess what? I get what I want. I get passive cash flow, and I have to manage the outcomes.
Yeah. Oh, that's so good. That's so good. So now, having done that 3 times and coming to that conclusion of, okay, I want to be the CEO. I don't want to be the person in the trenches, so to speak. Do you think that that's a good place to start? Or do you think that people actually have to go through those first 3 or whatever amount of properties it takes for them to get that hands-on experience to recognize, well, I don't like this, or maybe I do like this?
Yeah, dude, that's such a great question. And man, I think everyone has their own individual ways that they learn. Some people are really good by learning from other people's experiences. Some people can learn from books and podcasts. Some people just learn by getting their hands dirty. So understand who you are and how you learn. But for sure, doing it gives you way more appreciation, because if I hadn't done it, then I would come to turnkey providers and other people that are doing real estate, and I'd probably be a little bit more demanding because I don't understand the process. I don't understand what's required and the work involved in it. So me doing it, that gave me 2 perspectives. It gave me a very, very clear understanding of what I don't want. I don't want to be a real estate professional, but it also gave me a clear understanding of what I do want. And real estate was the same tool. It was just a matter of how I decided to pick up that tool. So doing it helped me understand, number one, hey, I can do real estate and I can do it to get the outcomes that I want, but I don't have to do all of the work along the way. The next thing that it helped me understand was, I lived in an area where it's a lot harder to do single family homes. I mean, the median price where I'm living, man, it's several $100,000. And if I wanted to buy real estate and start in my geographic area, I'd have to have a lot of money set aside to be able to do that. So also, not doing it on my own allowed me to plug into networks like yours and say, look, what if I bought properties in the Midwest? What if I live where I want to live, but I buy where the numbers make sense? That opened up a whole new game for me. And that allowed me to start from, rather than moving slow in what's in my geographic area, it started to open up my expansion to say, what if I look in other areas and buy the right property in the right area with the right team?
Yeah, it's so good. So something that I hear all the time inside of our Roofstock Academy and from just other investors in general is, how do you do in remote investing? I can't make that mental mindset. I'm too scared to relinquish control, so I can't go touch it, see it, and check up with my property managers. It sounds like the drive for you, because the numbers made sense, overcame that fear and relinquishing control. Is that what happened for you?
To a certain extent, I still am kind of a control freak. And so in every area that I've bought real estate, I've gone to that area, right? I've literally gone to the area, and that way, and it's kind of fun because if I go out there, for example, Memphis, Tennessee, when I very first went out there, I had no idea. I did my research beforehand and kind of understood maybe some of the areas in that area that I wanted to invest in. I took a plane out there, rented a car, got a map, and I just drove up and down the neighborhoods, up and down, and I circled the areas I liked. I X'd out the ones that I was nervous about, but here more than anything is what I did. I developed a relationship with the team that I wanted to use out there. Because at the end of the day, real estate isn't the objective. Real estate is the tool to exchange. That's all it is. I own real estate. Someone is going to want to rent that real estate. But if I'm going to do it passively, I have to develop a really good relationship with my property manager, the people who are finding the properties for me, the acquisitionists. And so that's what I spent and still do spend most of my time on, is developing really, really good relationships. One of the best things I've done, it's such a small thing, but man, it makes the biggest difference. In the team that I use inside of Memphis, for example, I've been using them for almost a decade now. And I've been out there a couple of times. I did most of my research in the beginning, and now I can manage it from my, kind of quarterback it here from Utah. But every single year, I send them a Christmas card and a gift card, right? Tell them thank you for all the work they've done for me, for my life, for my family. I send them a picture of, hey, this is what you're helping me do and accomplish inside of my life. Please go enjoy a dinner on me, right? And it's such a small thing, dude. It's such a small thing. But as I invest in relationships, man, I can't tell you how many times that team has gone above and beyond for me. I mean, out of all the people they manage properties for, guess whose name they know? They know my name, right? Because I invest in that relationship. On the other side, if I didn't appreciate that team, when I had a vacancy, I might just call them up and chew them out and yell at them and, cuss at them. And, that in the long run is not going to help me be free. That's not going to help me get what I want. And so having done it myself, I understand the difficulty, the brain numbing work that takes, and the expertise that's required to do it effectively and do it the right way. So I appreciate it more, and I honor the people that I work with.
It's such an interesting point you make, because I do the exact same thing. Actually, for all of the professionals in my life, all the teams I work with, I do the exact same thing. And you're right. When I pick up the phone and give them a call, they also pick up the phone and they know who I am and they appreciate. Yes. So I think that's a great tip, if nothing else, to pour into the relationships that you have in your life, whether it be your lenders, property managers, insurance reps, whoever, but just show them that you care, show them you're thinking about them, show them that you value the relationship. I think it goes a long way.
Oh man, it so does. Because at the end of the day, here's the crazy part. A rental property has never written me personally a check, ever. Yeah. It's a person that's written me that check, right? And house. So, the house is just the lure. It's just the lure to get people to do business with each other. And so at the end of the day, remember that you're investing in relationships more than anything.
That's great. Okay, so we figured out, and you figured out, that remote real estate investing was going to be the tool that you were going to leverage. So what then? What was the next step? What was the next thing that you figured out? Yeah, man. And here's kind of a funny thing. And I think a lot of, I'm assuming you're probably a lot like me in this way. I'm very entrepreneurial, right? I'm creative. I like to see new opportunities and go chase down those opportunities. So in the beginning, I was like, well, if one type of cash flow is great, what about all the types of cash flow? And so I bought a couple single family homes, and then I'm like, well, maybe I should buy an apartment complex, and maybe I should buy a long-term care facility, and maybe I should buy this. And I was looking at everything through the lens of cash flow, which is a good lens to measure success by. But at the end of the day, I wanted my time,
right? And I forgot that lesson along the way because the reality is every type of real estate is going to require a certain level of expertise inside of that real estate. And what I found is it's very, very hard to duplicate results inside of multifamily properties, inside of long-term care facilities. It requires so much expertise that it's hard to duplicate those results, and it's hard to plug into teams that do that. So for me, I kind of went a little bit crazy and tried to buy everything. And then I realized at the end of the day, man, I'm going to just go back down and simplify back down to the type of real estate that makes sense for me. Single family, 3-bedroom, 2-bath type of homes, bread and butter. Because the reality of it is, there's always demand for that type of property, always. It's the easiest property for a guy like me just getting involved to understand because, man, I've lived in a 3-bedroom, 2-bath home. I know exactly what it's like to live there. I know what areas there are good areas. I intuitively know how that works. It's the easiest type of property to get financing for. It's the easiest type of property to scale inside of a portfolio. And it's the easiest type of property to use to become financially free. So that was really kind of in the mid part of my game plan. That was a major lesson learned is not all cash flow is created equally. And if I want to, build a niche inside of long-term care facilities, then I need to focus on long-term care facilities. But if I want to be financially free, find a niche and get rich in that niche and just focus. So once I learned the ability with my personal finances to focus, man, it made my life so much easier. And then I could just double down and duplicate those results. And the more I focus, guess what? The better results I get, the better sophistication I get, the better I become at investing, and I can get results fast now, almost with my eyes closed because I've focused on it for so long.
Yeah. Oh, that's so good. Get rich in your niche. I love that. So Ryan, a question for you though is when real estate investors first start learning about real estate investing, their purview is kind of like this. And for everyone listening, I have my hands kind of over my eyes like blinders. All we can see is an inch wide.
Yeah.
But as you become more involved in the space, you start learning about, oh, well, I can partner. Oh, there's multifamily. Oh, there's fix and flip. Oh, there's BRRRR. And so how do people know once they've truly found their niche, or if they've just done something enough times to be good and comfortable at it? How should they know when to grow into something else?
Yeah, man, that's a great question. And here's the way I like to look at it. At the end of the day, this kind of goes back to money. And I think we kind of project onto money all of our hopes and dreams, thinking that money is going to give us what we want. Money will never give us what we want, right? Money is simply a tool. So At the end of the day, what I had to get really clear on, and I still revisit this over and over because you don't find it and then it's that same thing forever. But I had to get clear on what I wanted. Okay. So once I was really, really clear on what I wanted and why I wanted it, then I had to realize the only thing that was standing in the way of what I wanted and why I wanted it was me. Who do I have to become? Okay. So for me, when I first started my game plan, I wanted to have more time. I wanted to have more control over my time, and I wanted to be able to walk away from a corporate job. I've always been the only income earner in my family. My wife and I, when we first, got married, my oldest son, who had the heart surgery, man, he was born with just some major complications and required a lot of attentive care. And so from the very beginning, my wife has stayed home to care for our children. I'm grateful for that, but it's put a lot of pressure on me, right? I mean, I couldn't just walk away from a 6-figure job without having a way to replace that. So I wanted to be financially free. And if I wanted that, then I had to focus on using my money as a tool to get that thing, right? To get that thing, to get my time back. Now, over time, my why has changed, quite a few times, right? I wanted to walk away from a corporate job. I did that. It was awesome. Then I found myself, I wanted to teach other people how to do this. I mean, I have so many people asking me questions. Why don't I start a company and a business around this? Why don't I build my skills and expertise to teach other people how to do it? And so my why has changed along the way, but all along the way, I've been very, very clear on what I want. And when I know what I want, I can go back to money, and as a tool, I can say, how do I use this tool of money to get what I want? Now, if I come to the table and I say, hey, I don't have enough money, I want to go faster in my game plan, maybe I now need to use money as a tool and develop some more expertise. Maybe BRRRR is the right method for me because now I can inject some of my expertise to make more money and accelerate my game plan ultimately to what I want. So that's really for me. I think a lot of us, we think money's what we want. Money's never what we want. So get clear on what you want, then go back to money and see how money can serve you and the purposes that you have.
Oh, that's so good. That's so good. Off the cuff, Ryan Lee in the flesh. Love it, man.
Yeah, buddy.
That's great. So, Ryan, I'm curious to know, because you've interacted with so many people, you've coached so many people through money mistakes to financial freedom. What are some of the biggest hurdles that you see trip people up with regard to personal finance?
Yeah, man. I think the hardest thing for me in the beginning was to realize that what I'd been taught wasn't just not working, it was dangerous. Okay, so one of the biggest statements that we have inside of our community is one thing: 97% of traditional financial advice is dangerous, misleading, or outright wrong. Okay. And once I can look at money through that lens, now our definition of success is financial freedom in 10 years or less. Okay. So anything that's not going to get me financially free in 10 years or less, if I look at it through the lens of 97% of traditional financial advice is dangerous, misleading, or wrong, then everything out there is simply how to make something that's not working a little bit better. But if I can put down 97% of traditional financial advice, just put it down, and I can look on the other side, the 3%, that is literally the exact opposite. And if you look at every self-made, someone who's become self-made wealthy in a short period of time, they haven't done mutual funds, they haven't done 401ks, they haven't done diversification a little bit better than the average person. They've literally done the exact opposite. And that, in my opinion, is the first step towards financial freedom, right? If I can let go of most of the noise and distractions out there and solely focus on the few things that actually work and develop expertise and a system around those, then I can start to accelerate my results. So that's one of the biggest things. And that's kind of hard to realize, whether it was done by deceit, whether it was done by default, whether it's just kind of the social conditioning. I don't know.
Yeah.
I don't know if there's some grand master plan to keep the, American public trapped. But at the end of the day, once I had let go of traditional stuff and fully said, hey, I'm going to walk away from average in pursuit of extraordinary, man, that's what really, really started to open up my path to financial freedom. And so that's inside of our community. We're not for everyone. We're not trying to make you better. We're trying to truly help you rise up so that you can ultimately live free. And it's going to require you to walk away from average advice.
That's so good. What was the hardest thing for you to spread yourself away from, for you to give up from what you had learned, part of that 97%?
Yeah, I think, and even still to this day, right? I mean, it seems like the world that we live in is becoming increasingly more chaotic and increasingly more complex. Like if I get on Google today, I can find the 10 newest, greatest, best investments that will make me a multi-mega millionaire by tomorrow, right? Bitcoin, online businesses, whatever it might be, right? All these different things. And they all might be great, or they all might just be simple distractions, right? And if we look back historically from the very beginning of like economies, what has made people wealthy? Period. It's always been ownership of land. In fact, the American Constitution, the Declaration of Independence, was formed around life, liberty, and property, the ownership of property. And so understanding that, man, if we understand that there's historical background of thousands of years of success inside of real estate, why not just focus on that?
Why reinvent the wheel?
And so that, no doubt, man, just let go of the distractions. And then here's the fun part. Financial freedom is kind of like a pathway, right? If I can get on this pathway and start building consistent and predictable results, then financial freedom, unlike retirement, isn't a destination. I don't have to wait until one day. I can actually start giving myself permission to live free today. And over time, maybe once I've established a base level of cash flow that I'm comfortable with, maybe then I can go dabble in Bitcoin and be a multi-mega millionaire tomorrow or not, right? But I've built my financial freedom. That gives me the permission to go gamble and play if I want to, because that's what I want to do.
Oh, that's great. That's great. So what's something that you would share with our listeners, one thing that everybody could do today or starting tomorrow to start them on the correct path towards learning more about the 3%, or towards learning about what truly is, in your estimation, the way to financial freedom?
Cool. I'm going to give you our formula. Okay. So we literally have a financial freedom formula. And this is because I partnered with a dude. When I first started this, I'm the guy that just goes and does it, right? And I kind of figure out from a gut feel more than anything. And then I partnered up with this guy. He came from Wall Street. He literally, this is the funniest thing about my business partner. When he was when he was dating, he had a spreadsheet, right? And he would plug all of the people that he was dating into the spreadsheet, and he had a ranking criteria in a spreadsheet. And so math helped him choose his wife.
Oh my gosh.
Math helped him choose which car to buy. Math helps him choose. Like, this guy sees the world through numbers. And I kind of look at him kind of like Neo in the Matrix. And like Neo could look into the world of the Matrix and kind of see all the numbers. And the rest of us were like, I see a wall. You see numbers, I see a wall. Right. And so when I partnered up with this guy, he helped bring math to what I was doing. And we used math to clarify and to help us focus. And so we built a financial freedom formula, and it literally gives people a systematic way to move forward. And I'm going to give you one element of this financial freedom formula, and it's called the 4 pillars. Okay. And here's the crazy part. Every asset, no matter what it is, every asset under the sun has 4 potential ways you can make money. It all depends on how you participate in it, okay? So if you want to move faster inside of your game plan, inside of your financial, journey, you need to align your money with assets that give you all 4 elements in the 4 pillars. So let's do a quick case study. Let's take the stock market, okay? Mutual funds, maybe I'll buy some stock in Apple, whatever it is. We're gonna take the stock market and we're gonna put up real estate side by side, okay? So here's the 4 pillars. I can make money when I invest through appreciation. I can make money when I invest through cash flow. I can make money when I invest through tax advantages or tax deductions. And I can make money when I invest through leverage. Those are the 4 pillars. Every investment has all 4. It just matters how I participate. So if I, as a just off the streets type of guy, go buy a stock in Apple, how do I make money?
You'll make money through appreciation.
That's it.
Yeah.
Right? Appreciation. I buy the stock in Apple at one price. I hope I hold it for long enough, and over time it's going to go up in value. I don't control that outcome, right? I can't impact that outcome. All I can do is wait. And the only friend I have in the appreciation game is time. How much time has to pass before it goes up enough that I'm willing to sell it? Now, a lot of people got burned in the game of real estate back in 2006 and 2007 because they bought real estate using the same mindset. Real estate goes up in value. And over time, it generally does. But sometimes things go down in value, right? So if all I'm getting inside of my investing is appreciation, I don't control it. I have to wait, and I'm just kind of along for the ride. Now, if I buy a piece of real estate that I'm going to, buy through you guys, and I'm going to have the real estate, own the real estate, control it, I can have it go up in value. But more than anything, I'm probably buying it for a stream of cash flow, right? I'm going to have positive rental income coming in every single month. Now, here's the cool thing. If I take that rental income and put it in my bank account, does that affect the appreciation or the value of the property?
Nope.
No, they're not correlated, right? It can go up in value and I can take rental income. And I believe the IRS, okay, the very first statement in the IRS tax code, you know what it is?
No.
Everything you make is taxable. Sorry. But then like the thousands of pages after that, you know what those thousands of pages are written for?
Real estate investors.
To tell you all the ways that you don't have to pay taxes. Yeah. And the IRS just uses the tax code as a carrot to incentivize behavior. They know that everyone needs a place to live. So they say, hey, if you go buy that place to live and rent it to someone else, you get lots of tax deductions, not deferrals like a 401k, but literally tax deductions. So if I can own a piece of real estate, I can earn a return through appreciation, I can earn a return through cash flow, and I can earn a return through tax deductions. Last but not least, one of the most powerful tools and the most dangerous tools is leverage, right? If I want to go buy that piece of real estate, I don't have to have $100,000 in my bank account. I can, put a down payment down and go get that real estate, use bank money and get a high enough return to cover my debt and to still give me a positive return. And so those are the 4 pillars: cash flow, appreciation, tax deductions, and leverage. And so anytime an investment comes across my table, I just get to run it through that lens and say, okay, Bitcoin, cool. How do I make money? Oh, I don't get cash flow. Okay, there's no tax advantages and there's no ability to use leverage. It's just appreciation. And right now that appreciation game looks super fun, but that's the only game I'm playing. Right. Or, if someone brings me whatever, right? I can just run it through those 4 pillars and say, guess what? If I'm not getting all 4 pillars, I'm not playing the game.
Yeah. Yeah. No, I totally agree. And something I've touted for years about some of the benefits and power of real estate. So between you and me, have you found any other investment vehicle that meets all 4 of those pillars other than real estate?
Yeah, man. So everything in our world has a reason behind it. The reason we say 97% of traditional financial advice is dangerous, misleading, or wrong is when I first learned about the 4 pillars, I was like, yes, I found the Holy Grail. Now, what are all the assets that have all 4 pillars? And here's the crazy part. The first 2 we all know about, okay? Number 1, real estate. Number 2 is a business. Now, here's the crazy part, okay? If I go buy stock in Apple, okay, let's think about Tim Cook, the owner, and let's think about me. I'm a retail investor. I go buy stock in Amazon or in Apple, so I'm just getting appreciation. Right. Tim, on the other side, he's an owner of Apple, right? So he gets appreciation, he gets cash flow, he gets massive tax deductions, and he gets all different kinds of forms of leverage, right? From people to processes and all that other stuff. So business and real estate, those are 2 forms of 4 pillars. Now, the third one is a uniquely designed high cash value life insurance policy. And when I first learned about that, I'm like, dude, there's no, what? It's crazy. But man, here's the crazy part. Go Google it right now. Go Google BOLI and find out how much money banks keep in these type of policies. They keep billions of dollars. Go Google COLI, COLI.
Okay.
Find out how much corporations like Jim Harbaugh, like Michigan, University of Michigan, they're number 2 ranked right now, right? Like Jim Harbaugh, when he took the job, when he left the NFL to come to coach the University of Michigan, you know how 35% of his compensation was structured?
How so?
Inside of contributions to a high cash value life insurance policy.
Oh my gosh.
So I'm like, what the heck is going on? It was nuts. And so these policies, this is where politicians keep their money. This is where banks keep their money. This is where highly compensated executives keep their money. It's hiding in plain sight. It's been used for hundreds of years. It's a way to eliminate taxes, gain leverage, all of that kind of stuff. But the only 3 assets that have all 4 pillars are a business that you own and operate, real estate, which you have to operate somewhat like a business, and a vault, which allows you to keep the money that you're making safe from taxes. We call it a vault, but it's a high cash value life insurance policy.
Okay. Oh, that's great. This has been super, super great, Ryan.
That's so fun, man. I love talking about this stuff.
It makes 2 of us. You also have a podcast, right?
We do, man. So, this kind of goes back to, we joke a little bit. There's 3 questions that we invite people to ask. When they come into our world, they think it's going to be all about investing and rates of return and this versus that. And it is, right? To a certain extent, we're talking to people about how to operate a system. But I truly believe that the only thing that's separating you from the reality that you want is you have to become a different person, right? This is where the idea of rising up came from, right? You've done the best you can do with the mindsets and skill sets that you have. Your results are the best results that you personally could generate as of today. Mm-hmm. So if you dream and see a new reality for yourself, you have to become a new person. You have to develop new mindsets and skill sets to bridge the gap from who you are today and who you have to become to be a successful real estate investor or to become financially free, right? And so our podcast, more than anything, is designed to help people have a sense of courage and confidence that they can do it, that they can truly rise up. So yes, we go through the framework, we go through the financial freedom formula, all that kind of stuff. But honestly, man, our financial freedom formula is boring. Like once you learn how to do it, it's just, we tell you push the repeat button, do it over and over and over and over and over again. It's simple, boring. So what we try to help people do is generate the confidence to understand how to live a life that matters. Because financial freedom, and this is where I got stuck too. I mean, when I even got into the game of real estate, I still lost my way because I still kept thinking when I have enough real estate, when I have enough cash flow, then I'll give myself permission.
Yeah.
And so along the way, I had to learn how to become free, how to act free, how to use money as a tool, not for one day, but how to have a game plan that's going to help me get to the results that I want long term, but live a life that matters today. So it's personal development wrapped up in financial freedom, all delivered through the Rise Up Live Free podcast.
Sounds like a personal finance burrito.
That is a great, dude. I love that. I love burritos. That's exactly what it is. It's a burrito with guacamole.
I'm paying extra. Oh, that's great. Ryan, this was so much fun, man. If people want to learn more about you, reach out to you, learn more about cash flow tactics, what's the best way? Where can they do that?
Yeah, first off, Michael, before I say that, man, I want to just thank you for what you do. We talk a lot about this idea of being able to plug into teams and networks. And guys, whether you're a longtime listener of this podcast, a first-time listener of this podcast, what Michael does through his company and through the real estate that you provide, man, I think our clients have probably bought hundreds of properties through you, right?
Oh, that's awesome.
We actually did a training probably a year ago where we actually pulled up your website and showed people exactly how to find the right properties using your inventory, using what you guys do. So number one, you guys are awesome. And I want to say thank you because you've helped our people, our empire builders inside of our community achieve their goals and dreams. So thank you for doing that.
So glad to hear it. Thank you, Ryan.
And then number two, if you want to get plugged into our game, everything for us centers on a game plan. Okay, so we talk about the principles, and the principles are universal. It doesn't matter if you're, it's just getting started out, you've been in the game of finance for a long time, the principles are what the principles are. But then you have to understand how to tactically apply those principles to you, using your goals, your resources, your desires, all that kind of stuff. And so for us, the easiest way to understand what we talk about is we have a 5-day financial freedom challenge, okay? That will help you understand how to apply the principles to you, how to rank your investments through the 4 pillars and another thing that we call the core 4, and help you see how far or how close financial freedom is to you and how to apply the 3% formula to your financial plan. So cashflowtactics.com/challenge. That's probably the easiest way for people to understand what we do and how it applies to them.
Love it. Love it. Ryan, this was really great, man. Thank you again for coming on. And I'm sure our paths will cross again soon.
My man, such an honor. I appreciate you.
Thanks. Take care. Alrighty, everybody, that was our episode. A big thank you to Ryan. This was a lot of fun. He dropped a lot of nuggets of wisdom in there. So as always, if you like the episode, feel free to leave us a rating or a review wherever it is you listen to your podcast. We look forward to seeing you on the next one, and happy investing.